So I hope you're doing well. Welcome back to a new video. So in this one I'm going to discuss not only just the trade recap but also follow how to follow 1 minute order flow. So pretty much, as you know, not famous way, but a very popular way of trading in this community. You probably guys have heard the Asia run model or the ZTFX method. It's a similar thing, same thing. So it's something that we trade pretty oftenly because it's just how quick and in and out we can get out of trades and how beneficial it is really. And it's similar to how like a daily candle forms when daily market opens, and I'm gonna do a video on that soon. It's just a day profile and weekly range, things like that, so I'll do a video on that soon. But pretty much when it comes to the Asia run, I discussed it in my last video, and it's essentially just where you mark up the Asia high and low, and then pretty much price will just sweep it, and then usually chop in the opposite direction. So as you can see here on a 5 minute time frame, right, price here, this is the Asia session. So even though statistically and theoretically speaking, when you look at the actual Asia session times, I've even got a PDF in the trading tips section. In there will be a PDF for trading times and sessions and things like that. And statistically, Tokyo runs from 12 till 8, London runs from 12 to 7 till 12 to 7 for Tokyo, and 7 till, I believe it was 12 or 3, something like that. It's all in the PDF, but pretty much what I'm trying to get at is my times are different. So even though statistically, Tokyo runs from 12 till 7 or 8ish onwards, through backtesting I've noticed that this works better between the hours of 12 to 5, because obviously around half 5, 6 is when I get on the charts, and this usually gives me enough time to just pretty much trade based off it. So I look for the sweep of the 12 till 5 times, not the whole Tokyo session. So for example, as you can see here, London opened, even though I did sweep it, you'll see more often than not it'll work out when you mark up 12 till 5. So that's just something that I've noticed through backtesting, nothing too crazy. And then pretty much moving on to the 1 minute order flow. So as you can see here, we have a 5 minute chart here as well. So we would start looking at trades from around here onwards, right? Obviously that's once price broken below there. So I just want to discuss something here as well quickly before we go on a 1 minute. As you can see here, this is the 5 minute zone. So you obviously have this down candle, up candle, and that could be acted as like a supply zone on the 1 minute time frame. There was a supply zone on there. So that is a pretty high probability setup. So if you're ever in doubt, just zoom out. I only flip between the 1 minute and 5 minute on this one personally, but you can flip between 2 minute, 3 minute, whatever you want to, or even the seconds time frame. There'll be more opportunities on the seconds time frame. So as you can see here, if you go on a 1 minute time frame, you can see here I've drawn up all the opportunities. Now we just discussed here, and we would probably start to look to trade after that 5 minute chart from around here, so everything below here. So as you can see, we have a chart to the downside. We have this trading range, low and high, and then we have high and new low. See, we left this imbalance behind as well, which obviously validates this order block. And you can either take it as this whole candle, in which you would enter off here, or you can take it off the actual order block, which is also here. Now, in terms of trade management, this is something I want to discuss. If this is something you want to go back over and take a look, I would recommend you either come up with a few choices. You either set a minimum risk to reward, because as you can see, this ran to a 1 to 5. This is a loss. This ran to a 1 to 5 because it ran all the way down here, but we closed when price come back up here because it's managing into a structure. So if you were to let it, let's say like a 1 to 5, that's a 5, 10, 15. 15 now right there. Obviously take away 1 off from there. Then obviously this here as well. This ran to a 3.56 because obviously we closed all the way here after this body closure. And the same here, this ran to 1 to 5 as well. So if you targeted like a certain amount, 1 to 5, I think that's very achievable, because in total here, I'm not saying obviously this is, well, I'm not saying it's not impossible or it's impossible, because it's definitely possible. But when you add in human psychology, it becomes sort of impossible, because human psychology just, you have to be very disciplined for this stuff. As you can see, 5, 10, 15, 20, 25, right? Even this one here, 30, right? Take away the 1 loss, probably would have bought here, maybe would have sold in other places. There's another loss here as well, take away 2. So in total around 28 are obviously just based off these trades alone. So that's the potential you can make if you were certain, aiming for a certain amount But as you can see, sometimes, you know, when you manage it with structure, price will just continue to, for example, we've got this new high, this new low. I'll mark it up in a minute, but the minute price takes out the low, right, so as you can see here, break a structure above here, this is our new high, because obviously we do it based off the 3 candle method. This is the low. So the minute that our price, because obviously we're in a buy position here, let's say, right, the minute that price breaks this low is the minute we close the trade, because that's obviously trading against a structure. Okay, so you'd wait for a body closure. Because if you notice here, I haven't, like, for example, you know, if you take a look at this here, we entered these 2 trades here. I didn't close the trade here because it's only a wick. So if you are managing a structure, wait for a candle body closure, not just a wick, because sometimes it will wick it and continue dropping, and it's usually just sweeping liquidity. So don't be fooled by that. As for breaker structures and chocks, I include wicks just because it is on the 1 minute time frame. If you obviously you're part of the course, you'll understand that higher time frame body closures, low time frame wicks is fine. So yeah. But obviously some of these highs and lows you probably can get away with not marking. So, you know, you can probably, like, let's say for example, rather than counting this as a low, you can just go on to count this as a low instead of that one, things like that. So you can make these minor refinements when marking your highs and lows. But yeah, pretty much the moral of the story is, you know, there's so much opportunities. It's just about being on the right side of the market. I gave a couple of lessons, as for example, body closures and wicks. Also, another thing I want to point out is that would we sell from here? So even though it seems to be following bearish order flow, we wouldn't sell here because we'd be entering off a boss, so a BOS. So obviously a chock is unconfirmed trend. You'll see many chock trades, and that's absolutely fine. I think this here is actually a break structure if you include, this is an actual chock, to be honest. But as you can see, right, pretty much what I'm trying to get at is if you can take chock entries, you know, if you can take chock entries, like, you know, say for example we're selling here, this is a chock, that's fine to take. There's no issue in that. You know, but if you take BOS trades, like for example like this one here, as you can see this is a chock and a BOS, so we wouldn't take a sell from here. I mean, unless you wanted to flip to, you know, the seconds time frame or wait for a bearish candle confirmation, that's fine, right? As you can see here, we close below here, so that's where we simply look to close the trade, 4.67R. But like I said, if you're targeting a minimum of 1 to 5, it's very consistent to hit those 1 to 5s. So that's something I maybe start doing. As you can see, it's clearly working. Again, we wouldn't sell here, so we can avoid some unnecessary losses, because obviously we don't want to sell equal highs. We're not, you know, it's one of them, you either become the liquidity or you can either see it. Obviously we want to prefer to see it and take advantage of it, so we wouldn't be selling off there. Obviously a lot of people probably will, just because obviously this huge imbalance push, and a lot of people will obviously will be induced to sell here, but that's obviously manipulation right there. But people don't understand these equal highs previously, and also these equal highs here as well, and which it did create later on. So we wouldn't sell from here because of liquidity. We wouldn't sell here because of the boss. I mean, could have probably bought from here, but like I said, it's a similar story. Boss, you wouldn't look to trade, you know, for example, a boss into that. So maybe if you took up, you know, something like this and you took off this internal structure, maybe you could have took a trade based on this buy position here. But that's obviously like way too advanced into it. We don't want to keep, you know, we don't need to overcomplicate things. Just keep things simple. But yeah, that's pretty much it. It's just, this is 1 minute order flow. But like I said, I think if you were to go and study this on EURGBP 1 minute time frame, I think there's a lot of lessons to learn. Also as well, I didn't really mention this, but there was obviously this zone marked here and this zone marked here, and as you can see, that was the zone obviously in which it respected. And like I said, we made a retracement for creating a new high, so boss entries are a no-go. But yeah, that's pretty much it. That's all you got to do when following 1 minute order flow. Like I said, you can use like the 5 minute and, you know, 1 minute chock and whatever off the Asia run, because that's like added confluence. And if you understand the daily cycle of a candle, you'll understand that. For example, I'll do a quick example here now. So if we have like a bearish candle, right, and a wick up like that, you look at that on a lower time frame. So that's a daily candle. If you look at that on a lower time frame, let's say it opens here, right, it'll usually go up before going down, and that's how a daily candle works. Okay, so if you can sort of tie this in, because obviously the daily candle opens around Tokyo session open, and as you can see, price consolidates, creates a high of the day, then obviously sells off. So when you have that perspective with you, and vice versa for a bullish candle as well, it's down first. If you have that sort of, you know, confluence with you, it's just the added confluence, I guess, because at the end of the day, it's not about being right or wrong in the market. It literally all is probability, and it took me a long time to understand that, but it's the truth. So like I said, depending on whether you just want to jump straight to the 1 minute time frame, get involved in the 1 minute ranges, you can. But like I said, if you ever get, you know, if you feel like if you're in doubt, if you want to take a trade from here and you're hesitant about taking a trade from here, well, you can always just zoom out, right? So let's say the 2 minute time frame, and let's like see if there's anything on the 2 minute time frame. Okay, and it's like, yeah, just if in doubt, just zoom out, and it's as simple as that, really. As you can see, it's a 3 minute wick, so you can tie in these things. For example, like this is buy to sell, right? So a supply zone. Tie in these things to high time frame. So if you're in doubt, just zoom out. It's the best advice possible. And yeah, just follow the 1 minute order flow, follow the 3 wick method. And like I said, if you understand that perspective with the daily candle, and you can tie this in with the Asia session, you know, and be on the right side of the order flow, because as you can see on the H4 time frame, right, on your GBP, we are moving pretty bearish anyways. You know, we're tapping into this sort of wicks here. Obviously we've got this chalk BOS, and we're still within a bearish range. So yeah, that's pretty much it. Like I said, it's all just got to make sense, and if you can explain it, if you can just go through order flow like this, things will become a lot clearer, because you'll actually notice a lot of things. But yeah, like I said, go back test it, have a look at, you know, where you would have entered personally. Maybe add in other things, like for example, set like a minimum amount. I wouldn't obviously set like, you know, 1 to 20s. I'm just not vibing with that one. But yeah, a rule of thumb is as well, I mentioned this in the last video, when you mark out your sweeps and Asia highs and lows, for example, when you see a chuck to the downside here on the 1 minute time frame or the 5 minute, whatever, a rule of thumb is to, let's say if you're in a sell opportunity from here, is to target the other side of the Asia session, because obviously that would be that Asia low liquidity as well. And it's vice versa when looking at buys. If you take a buy because we swept the lows, you want to ideally, as a rule of thumb, look to target into the other, you know, the opposite side of the session, because obviously there's that underlying liquidity. And also on the high, if you look on the high time frame and you're on the right side of the order flow, so for example the order flow is bearish in here, the high time frame is bearish, we want to be looking for those sweeps to the upsides ideally, and obviously that'll be added confluences, looking for a sweep to the downside. You know, we wouldn't look to buy from that if the high time frame is order flow was obviously bearish, you know. So try and tie it in with market structure, understand the fractal nature of it as well. And yeah, another thing as well, if you are counter trend trading, because if, let's say for example the high time frame is bearish but we sweep the Asia lows, you can still take it theoretically, because obviously it's a, you know, part of the plan. But a rule of thumb for that is to target the equilibrium of the Asia session. Okay, so that's just the rule of thumb, and yeah, pretty much that's it. Like I said, any questions, just send me a message or pop it in Discord. But hopefully you can just understand, you know, 1 minute time frame trading may seem a little bit scary, but it's really not. It's actually pretty fun. You just got to build a narrative and just follow price and really get into it, and just be absolutely disciplined with your highs and lows and things like that, and just understand and take in every bit of information given. But yeah, I'm going to end the video here. Didn't want to keep it too long, around 15 minutes in. And yeah, thank you guys for watching.